Welcome to Resilience and Resolve with Lance Drury.
Welcome to Resilience and Resolve with Lance Drury, the show that helps individuals and small business owners fight back when the IRS comes calling. Lance Drury is a seasoned tax attorney who's been defending clients for over 20 years with one goal in mind: protecting what matters most. I'm your host, Evan Mack, and today we're talking about small business owners. Running a business is hard enough without worrying about the IRS, but sometimes the biggest tax problems start with bookkeeping mistakes. This is small business bookkeeping mistakes that lead to tax problems. Lance, sir, welcome back.
How you doing, Evan? It's always a great pleasure to talk to you.
I'm good. You know, it's always good to see you, sir. Listen, what are some of the most common bookkeeping mistakes that you see that end up triggering these IRS problems?
Well, one of the biggest reasons is that they just don't keep the books. They don't keep the receipts. They don't do it at all. And so that's the biggest problem. And, you know, particularly under state law, there is an obligation. It's against the law not to keep good books with a business. And so the other thing is that they don't keep accurate records when they do keep the records. So that's the things that tend to trigger that. And I have to tell you, at least in the state of Missouri, the two big items that they go after at the state for audits is restaurants and convenience stores, because they think they're always hiding cash in those two areas. And so that's why they go after those. We defend a lot of people that are restaurants. We defend a lot of people that are convenience stores, because that's who the state of Missouri, at least, targets when they do these audits.
Well, why is it such a big deal when business owners mix personal and business finances?
Well, I tell people the first time they call me, if they're a small business owner, they're self-employed, I ask them, do you have a separate checking account for the business? And sometimes they tell me no. I said, you've got to start doing it. You can't commingle the business and the personal, because how do you know how much money you make? You know, if you have a separate account for the business, you look at the starting balance on the first of the month, and then you see what the ending balance there is at the end of the month, then you know how much profit you've made. And the other thing is, you don't have to spend all that time, you know, trying to figure out what's business, what's personal, so that you can truly find out what profit the business made. The other thing is, which is a problem, is I've had people who took their personal items to prop up the business and put it into the bank account.
Wow.
Without having a paper trail. And of course, the burden is on the taxpayer once they're being audited to prove that any funds that were distributed into the business account were not income for the business. So if you're going to use some of your personal funds because the business is having a bad month or whatever, you need to keep a paper trail that that's actually happened, and even set up a legal document saying that you're loaning this money to the business, so that there's clear paperwork there if the authorities come and try to audit you.
Wow. So what kind of red flags show up in maybe sloppy or incomplete records, and how does the IRS use that against the business?
Well, you know, if you don't have the documentation, once you're audited, you're not going to get all those expenses. So you can't just estimate. You've got to have proof of that. And, you know, if you have certain expenses in a business that are too high, such as mileage and truck expenses or whatever, it's going to be a red flag to the IRS that, you know, they're going to have to prove up these numbers because they seem really high. And so you want to make sure that everything's accurate. I even had people who admitted to me during the initial consult that they had fudged the numbers, and now they were audited. And so now it's time to pay the piper, because you just can't do that and get away with that. You've got to keep accurate records, and you want to make sure that those records are accurate in case you get audited, because then, you know, in addition to, you know, changing the amount of tax that you owe, there can be fraud penalties sometimes if it's really bad, and those can be ridiculously high. I think it's like 75% of the raw tax they can add on as a fraud tax. And I've had clients that was done. But the good thing is, if you accept the results of, say, an audit for 1 year, you can prevent, sometimes you'll say, okay, we're not going to contest this any further. And they agree then not to open up the audit to future years. So you can save your client monies that way. Because if they had problems in 1 year, invariably they're going to have problems for a number of years.
So how often do tax issues start not because of fraud, but maybe simple disorganization?
Well, I think that happens a lot. And,
Yeah.
sometimes it's not a full fledged audit. For example, sometimes they'll just write you a letter, the IRS, they call it a letter audit, and you just have to submit documents there. Nobody ever shows up on your doorstep. Then there's other audits where you either have to go to their office or they're going to come to your place of business. They want to examine all the assets in the business. And then recently, we had another kind of audit down in the Nashville office. It took all day on Fridays every other week to conduct this audit because it was a line by line audit of this
Wow.
person's tax return. And now it's completed, and my attorney down there hasn't heard from the auditor for probably 3 months now because it was so intense and they've got other stuff going on. It's going to take him a while to go through all the paperwork that was submitted during that audit.
So what happens if someone can't produce these receipts or maybe the documentation for the deductions that they've claimed? What can happen, Lance?
Well, then they're going to adjust their tax return. They're not going to allow those deductions because you don't have any proof that you actually had those expenses. So that's the problem. If you don't have the documentation, and Evan, you and I have talked about this many times, you've got to keep the documentation. If everybody thinks that the American dream is being in business for yourself. Well, guess what? 75% or more of small businesses don't make that much money. You have to fund your own retirement. You
Hmm.
have to fund your own health care. And then you have to work long hours normally. And then you have all this paperwork that has to be completed. And a lot of small business people, they're good at what they do, but they're not good business people. They're not good at taking care of all the paperwork that has to be done if you're a small business, and that gets them in trouble a lot of times.
Mm. So you said there were certain industries that the businesses tend to be more vulnerable to bookkeeping related audits. What was that? You said like with restaurants and what were you saying?
Restaurants and convenience stores, I see, are subject to a lot of audits at the state level. I would not say that's necessarily true at the federal level. A lot of times,
Mm.
what triggers an audit at the federal level, some of them are random, but for the most part, it's, if they have an expense that just sticks out as it looks like it's suspicious because it's high, then that's what's going to get you in trouble, and may subject you to an audit if your expenses are just higher than the norm. That's when you're probably at greater risk of being audited by the feds.
Do you have an opinion on why it's restaurants and convenience stores? Why do you feel that's the one that kind of gets picked on?
Well, I think at the state level, the reason it gets picked on is because they think everybody in the restaurant business and everybody at the convenience store business is hiding money. They're hiding their cash,
Hmm.
because a lot of those businesses get paid in cash. And so they think that they're hiding that from the taxing authority so they don't have to pay as much taxes as they should. And so that's why those two industries get targeted at the state level.
Mm. So what advice do you give to a business owner who's afraid that their books are a mess and they don't know where to start, Lance? Maybe they've been not keeping good documentation for years.
Well, they need to go back and see if they can adjust all that and clean up those records. But if they can't, they at least need to start keeping good records moving forward. Have a separate bank account for the business. Do not put any personal income into that bank account. Do not pay any personal expenses from that bank account. So everything is clean. And so when they come, they make it easier on the auditor to see, yeah, this guy's on the straight and narrow. He's doing everything he should do. And make sure you keep records of all the monies you bring in and all of the expenses for the business. And so, credit cards, have a separate credit card for the business. those types of things, so that it's all there in one place. It's easier then for the taxpayer to see how profitable the business is, and he can also examine those areas where maybe he needs to cut expenses or what's working and what's not. But it also makes it much easier for the taxing authorities if you're going to be the subject of an audit.
Hmm. Can hiring a bookkeeper or CPA fix these mistakes, or is it too late? Or should you try to do it yourself? Or
You're still going to need to have the documentation. Although I had a guy here, and he was under criminal investigation by the federal government.
wow,
It was like 2, 3, 400,000 that he owed,
Whew.
and he had his bookkeeper accountant fly up from Houston, and the bookkeeper said, "I didn't keep any records.
Woo.
I just did what he gave me, told me what the expenses were, and that was it." And of course, the guy didn't have any proof of his business expenses and deductions. But how we did it, I don't know. But he was not charged criminally. It's turned into a collection case. And so now we're just thrashing all that out to see how much of that debt he will have to pay back.
Pretty good, Lance Drury. Pretty good. I don't know how you pulled it off.
Yep, that was a good one. That was a good one.
This is
But
good.
we've had a lot of great success stories here, Evan.
Yeah, I'm sure you do. So, Lance, what's your message to business owners who've been putting off bookkeeping cleanup out of fear of embarrassment or just fear of what they might find?
They need to hire an accountant. They need to have an accountant do that. They can give them a checklist, tell them, here's what I need, here's what you need to do. People think they're going to save themselves some money by doing all this themselves. Well, guess what? It doesn't get done then most of the time, because they're working till 7, 8 o'clock at night on their primary job. And the last thing they want to do when they come home late at night is to do paperwork. And, then if they do keep a shoddy job, if they get audited, it's going to cost them a lot more money than it would if they had hired an accountant in the first place. So that's what they need to do.
Lance Drury, sir, it's a pleasure as always.
Thank you, Evan. It's always great being here.
Awesome. And thank you all for listening to Resilience and Resolve. If your business needs help cleaning up the past and getting ahead of the future tax problems, visit lancedrurylaw.com. Lance and his team know how to help business owners face the facts and fix them before the IRS steps in. Don't forget to subscribe to the show, leave us a review, and share this episode with someone that would find it helpful. Thank you so much for joining us, and we'll see you next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.